Many of you will know that, and I've said this on many webinars and in my manual, one of my more favorite trades tends to be one of the major currencies, sterling, against the minor currencies, New Zealand dollar. And you can see this morning it's been particularly good. Now, the 30-minute and the 1-hour bars are my favorite. There's a sell signal there. You can see it's falling quite nicely and sharply. The dotted line is where we add to our winning position. When the price gets to that point, the stop loss, which is listed there and off screen at the moment, gets moved down to this original entry point, gives us ample room. Now, some apprentices play around with that. What they say is, no, I'm going to keep the stop loss trailing just behind dynamically. I've discussed this in other videos on pipspredator.com, so don't worry about that. But my point is here, I think it should always be on your watch list. Sterling, New Zealand dollar, 30-minute or 1 hour. Some people prefer the 15-minute. That's entirely up to you, but I'm just telling you what I like. Remember, this is supposed to be hand-holding. It's not supposed to be dictatorship. So on the hand-holding, yeah, 30-minute, 1 hour. And as I say, one of my more favorite pairs is sterling, New Zealand dollar. And we try and do trades on that whenever we can. Of course, they're not all winning, but the trends, as I say, tend to be a bit more well-behaved, a bit more sensible, because it's not a major currency trading pair. So I think the banks aren't going so crazy over it. And that does make life a lot easier for us.